Good morning. Welcome to the BF Anderson Technical Report for December the 23rd. The vicious move from bonds to equities post-Trump is an interesting interview with an analyst with Robert Baird and Company. Patrick Spencer is a very humble analyst, and he's basically saying in this interview that Trump economics is a big deal, meaning that we are leaving an economy that's been driven by monetary policy, and we're now moving to an economy that's going to be driven more by fiscal policy, which is government spending, tax cuts, etc. And this is going to allow inflation to pick up. So the vicious move from bonds to equities is going to be the pain trade. Now, if you look at this graph that I have on the screen, you can see what's happening to the TLT, which is a 30-year, 20 to 30-year government bond fund. And you can see that bonds are really having a tough time here. Now, what also is discussed in the interview is how, you have inflection points in the economy, such as under Ronald Reagan. When Reagan came in 1980, we had hyperinflation. And everyone was of the opinion that what they call the new normal was that we were always going to have inflation, that it would never go away. Well, then Paul Volcker comes in and the whole ball game changes and interest rates start to drop and we start to get more into a normal economic situation. It's just the opposite here. We've been in a deflationary cycle now since '08. That has been the slowest economic recovery in history and is basically deflation. Now, under Trump economics, are we going to see a reversal of that? Well, let's look at a few graphs just to see what I'm seeing. Crude oil, which is West Texas Intermediate, as you can see, has had a tremendous drop. The bottom pretty much fell out of oil. Now, we've formed a pattern here called an inverse head and shoulders. Here's your left shoulder, the inverse head, your right shoulder, and oil prices are breaking out. Now, I have heard that oil prices could go higher next year as much as $75 a barrel. Now, here's steel. This is the steel index. Tremendous breakout at the time of the election. This has a lot to do with a $1 trillion infrastructure bill that's going to be proposed or something along those lines. And also, I believe that steel prices will continue to be protected under the Trump administration. Now, here is copper. Now, copper, too, has broken out in a very meaningful way. See, this is the stocks and the companies that will benefit from inflation, which would be things like steel, copper, cement. In the interview that I mentioned, he talks about the mining stocks, the financial stocks, the construction stocks. These are all stocks that are under-owned by institutional investors that he thinks they're going to have to transition away from what's been benefiting from the deflation, and now you're going to have to move towards things that are benefiting from inflation. Now, here is a company here called Freeport-McMoRan. Now, you can see that stock has been it had a strong move, is now having a corrective process. Now, sales this year, now I'm putting numbers up here just to show you what fundamentally is going on here as far as estimates are concerned. Now, the estimate this year is that their sales are going to be down 4% this year, up 4% next year, but a whopping 425% increase in earnings this year and a 412% increase in earnings next year. Now, here is a company called Steel Dynamics. Again, we've had a substantial up move in the stock, has pulled back, had a correction. This year, sales up 2%, next year 9%. Earnings this year up 163, next year 23. Here's a trucking company called XPO Logistics. Sales this year up 92, next year 3. Earnings up 343%, next year 76%. Now, I just wanted to show you another company here that just recently reorganized. This is Alcoa Aluminum. I mean, look at the move here in aluminum. If you look at a company like Dow Chemical, now realize for the last 2 years, Dow Chemical's earnings have been declining. Well, This year, their sales are going to be down 2, next year up 6, earnings up 5, up 11. So earnings are turning up for these companies. Here's General Motors, which is a large user of aluminum. Earnings, sales this year up 7, next year 1, earnings this year up 20, earnings next year -5. But you can see here that the autos are breaking out. Now, on the financial side, here's Charles Schwab and Company, and I think what's interesting to note about Charles Schwab is we have a nice little base pattern here, and the stock broke out to an all-time new high on Tuesday. Now it's pulled back a little bit here, but sales this year up 17, next year up 13, earnings up 34 this year, and next year up 22%. So basically what's being said here this morning is that we are transitioning into a different world where we're no longer going to benefit from deflationary type of situations, and it's going to become more of an inflation market. If you have any questions, please give me a call.